All right. Good evening, peoples. I hope you enjoyed your payday. I sure did. Three different accounts, although a few of them pay differently. Just an FYI for some of you guys that have SWAB, um, they will pay the night before or super early in the morning. But I noticed several comments, and then I noticed it in my account. They'll pick some funds, like they paid Misty and Coney, and I think my GDXY. Then later, I got Tesla and Ybit and some others. So, and then I know of some funds. Fidelity typically pays early and in the day. I think E-Trade is kind of famous. Again, you guys can tell me in your comments. It helps everybody. So on the comments in here, just tell me which fund you own, right, sorry, which retailer, right? Robinhood, Schwab, Fidelity, Interactive Brokers, they pay pretty well. So that the guys that are new and they're buying in those funds, like I think E-Trade falls in that category. I don't have an account with them where they pay the next day. Schwab used to, from what I heard, I was an Ameritrade guy right up to the end because of Thinkorswim, and I've only been in Schwab for a while, and I'll probably be moving some account monies to Interactive. But anyway, I wanted you guys to comment so it just helps other people, right? All right, so let's jump into GDXY. So what happened, excuse me, on Monday was we had a slight down day, right? But we did better. Look at GDX, went down 0.47. We only went down 0.05. And that's kind of interesting because we're a little bit capped on this large one here at 36 because it closed at 36.10. So I'll comment more on that when I get into holdings. Otherwise, there were no trades. Share count remained the same, not much change in cash. So let's take a look at the weekly. That's always telling. That and the holdings really tell you pretty much everything. Since we had no synthetic trades because we didn't put any trades on. So here's the one where we're capped, and it's kind of the bulk of our, obviously it's over 90%, right at 90% of our volume of contracts that expire the end of this week. And they had written them kind of close anyhow. So this looks reasonable. My gut on GDX is it probably won't really wake up until the earnings start coming out. And I think Newmont is one of the earlier ones. I made a note in here in the comments that lots of earnings coming up this month and early August for the top 10 holdings. Anico, Newmont, on and on and on. They're typically large cap gold miners, right? There's some medium sized, larger medium sized, but they're the big guys, not the juniors and certainly not the explorers. These are all producers. So, anyway, what's going on with that is we may retrace it, but I'll give you the details in holdings about how we can still win that. But I just wanted to point that out. So, again, these were slightly down, right? From 3627, and we only went from 1875 to 1874. So not a big deal, but you like to collect all your monies and you hate to see it be lost. But let me point out on holdings, this is great for teaching how these naked calls work and how they decay and so forth. So let's take this 36. It's showing with 4 days of trading at the close a value of 59 point, almost 60 cents, right? 59 and a half cents. So we only collected, I think, 35. Let me go look at that. So again, if you want to fast forward, you can, but this is a teaching exercise. So we collected 35 cents, as I thought. So what the scenario is, they're calling it worth 60 cents. I'm going to round it. So we would have to pay 116 right now. But what's it made up of? Why is it 60 cents? Well, it's 10 cents above the strike price, right? So that's the price premium. You're always, when you go above the strike price, you have a price premium. All the rest of that premium is what we refer to as time premium. If you get into the Greek, there's names for all that, but I'm just going to call it simple man's English, right? It's time premium. What happens every day of these 4 days remaining? If you stayed right at 36.10, how many of you can tell me what you could buy it back for, give or take a penny, on Friday at near the close? Well, if it stayed at 36.10, logic dictates that you could buy it back for 10 or 11 or 12 cents. The way that they're in these European options where they never get assigned, and on an exchange it does this, they actually have to sort of negotiate a buyback, right? Whereas you and I in the retail market, if we sell a naked call and we're underneath the money, it just expires worthless. It doesn't work that way in the way they do these synthetics and calls, because they use a different marketplace and they select European options, okay, which doesn't have anything to do with the geography. It has to do with that you don't get assigned. Remember, they can't really own the underlying stock. So the last thing they want to do is get assigned. If somehow they didn't use that exchange and got assigned, they got to quickly sell it, because they can't have money in the underlying stock and a single stock, right? It's against the SEC rules. It says, so what they do is they put 90+% of their money on all these treasuries as collateral, and they put on these synthetics which mimic being long the stock, and then they sort of cover that or offset that with a naked call, and they call it a covered call strategy. So that's the detail, guys. Again, for newbies coming in here. So the 60 cents, if you just fast forward to Friday and it's still 36.10, that's 11 cents. So we make 35 cents minus 11, we still make 24. So theoretically, not theoretically, real, it can go to 36.35 and we're break even. We got to hand back the 68,000 they handed us, but we don't have to give them any more money. So in order for to lose 59 cents, it would have to be 59 cents over 36.35, right? So it looks like a big loss right now, but unless it keeps running, and that happens sometimes, I don't suspect, I don't see what would cause that in GDX right now. Once we get into earnings mode, we could really move. And then we also have to roll the synthetic. Okay, guys, that's the teaching mode. Let me just finish this up. So where are we with our liability? We are at 403,000. Okay, that's up from 365, down from 572, and way down from 712. So we're doing okay here. I don't like that I like that they laddered, right? They had a 36 and 37, but I don't really like that this was fairly close to the money. So right now, on paper, our 77,000 we were paid, we'd have to spend 121. But as long as we stay in the low 36s, we should be fine. We closed at 1874, down a penny. Fair value is saying 1871. Okay, let me get to payouts and wrap this up for you guys. All right, no real change, right? Because we didn't put any trades. We just keep on keeping on. All right, guys, so that's what I got for you. The shares stayed the same. Right now, as a reminder, we've got 36 cents in the kitty, and it's pretty evenly made up. 18 and 18. You see 77,000 on 425 shares is 18 cents, and 75, almost 76, is another 18 cents, right? So there we are, collected 36 cents early. What we don't want to, well, it's a mixed bag. If we were to run up to 37 and not go past it, we keep, the 37, but that's only 10% of our naked contracts. But we would make good money in the synthetic. So, it's always a mixed bag. I personally like them to try and win the weeklies when they can, but they need to understand when these assets start to run, they need to give more room. And honestly, I don't think the fund manager's got so many things to do. It's the last thing they're trying to do sometimes is optimize the money. They've got a formula, they've written a prospectus, and it says, we need 1% yield a week to end up paying 52% yield, annualized yield. And that's what they got locked into their brains. You and I might take a different tack, but overall, I'm pretty happy. Me personally, since I know this market space so well, I'll be doing a lot of other plays and I'll probably be giving you guys more details. I'm going to start giving you some ideas of what I think some of the top 10, how much increase they're going to have and how much they're going to earn, which I think will help GDX move up a lot. Okay, guys, that's what I got for you. I'm not a financial advisor. This is not financial advice. Have a great week ahead. Bye now.